There we go. Futures dip as focus turns to Fed meeting. We got a news event. Okay, we've got a news event. Interesting. We've got a news event here that might give us, might be a catalyst to this move down here. That's going to be very interesting to see. Negative. We got negative news. Negative news for the indexes here. Right here. That's very interesting stuff. 14 minutes ago, we've got this negative news here. What's up, Graham? How's it going, buddy? Hold on one second, guys. Hey, Mariana. What's going on, Frank? All right. So we've got some news here, and I'm wondering how that's going to affect the indexes here. So interesting stuff. We'll see how this plays out. But look at, okay, we're pre-market right now, and we're taking a look at 4-hour chart has just given us the crossover. 1-hour chart also down very early in the trend, and it's pulling back early into this zone here. We can take a chance on that. Okay, guys, we can take a chance on that. Okay, let's take a $100, a small risk, so we can bring that above. Okay. You see where I'm going with that, right? So we are extended on that 5-minute chart, which means we have to pull back above the 50 to recalculate and continue the move down. Is it going to work? We don't know. We can just we can just speculate, right? But we're pulling back into this supply zone here with a lot of downward momentum, right? Downtrend, downtrend, downtrend. The question is it going to be this supply zone, or is it going to be something up here? We don't know. So we're gonna take a shot at both of those. Okay, so we're covered by the 5-minute supply zone, and on the 15-minute chart we have this rally-based drop, and we're also covered there. Okay. So no, okay, we can only get into 4 contracts by covering these two. So we're covering 2 supply zones with 4 contracts, one on the 5-minute chart and the other one right here. Okay, let's get rid of all of that. Okay, one right here and one right here. 5-minute. Okay, there's the 5-minute. And right here is the 15-minute. Okay. Not sure which one is going to hit, but that's less than 1% of our total account, and we are able to take that. Okay, we're able to take that risk. All right, so we're almost there, and that's pre-market. So the timing of all of this is really good, guys. We've got we've got a supply zone, we've got negative news, and pre-market. So if we are able to pull back in here pre-market, and then the market opens and it goes through all of its crazy swings and forms that opening range and then breaks out to the downside, we're way ahead of all of that. Okay, we're way ahead of all of that. We've got a TrendCloud signal forming. You can see it forming. It will flash again there. Little bit more. We need a little bit more. Yeah, we've got to pull back a little bit more. Otherwise, if we don't pull back and get into this, and this continues down, we're going to be very extended. We're going to be really seriously extended on that 5-minute chart, and we're going to have to wait and expect for some type of pullback into this area anyway. So this is great. This is like you don't see this every day, do you guys? We don't see these perfect setups every day. And that's how you have to think. You've got to remind yourself that it's a bit of a waiting game. So during the week, as you're practicing with TrendCloud, trying to understand the movement of price, how price is moving with TrendCloud on each time frame, and saying, okay, well, a pullback on the lowest time frame is pulling back above the 50, right? It's pulling back above the 50 so that it could recalculate because the candles are blue. Then you go to the middle chart and you say, okay, where is that in reference to the middle chart? Well, it's right here, right at the 50 simple, okay, on the middle chart, and it's within the trend cloud. Okay, great. How about the high time frame? Well, that's pulling back. That's pulling back to the 50 simple, right where it crossed over. Okay, and right here is the 100 simple moving average, and that's where we're getting the bounce from. In fact, we've got a lot of resistance located in this area, don't we? Look at all of that. Let's bring it just like that. Okay, so we have to break through all of that stuff. There's a lot of stuff there that we need to break through, and that's all coming from here. See how all of this, all these lines here, this is like previous day's close. Let's see what it is. Previous day's open, previous day's low, and then these two lines here, previous month's high, previous week's close. Previous month's high, previous week's close. Okay, so we've got some, and then down here, the previous month's close. Okay, so we're pulling back into that previous month's high, previous day's open, and making quite a rebound off of that. So taking off at least 2 contracts here, is what we would want to do. Take off half the position here. So we're going to get in here, right? We're going to get in here into this supply zone, make a move back down to here, take off half the position, and then we're going to watch what happens, right? What was the bad news? Inflation? The bad news, apparently, bad. I'm saying bad news. There's no good news. There's no bad news. There's just the news, right? But this is what we were looking at before, Graham. Futures dip as focus turns to Fed meeting. So, everything. So people are very bearish right now because the Fed is going to say, they're afraid the Fed's going to say something terrible, and the market's going to go down. Although we've seen in the past, quite the opposite happen. So that is the bad news, Go back to the 15. All right. But does everybody see the logic here? I mean, that's what these meetings are for, right? So everybody sees why I'm taking this, right? High time frame, downtrend, right? We've got the crossover. Candles are red. Okay. Cycling down, momentum is down. Great. Red, red, red across the board. That's why it's color coordinated. That's why your TrendCloud is color coordinated, right? Middle time frame. Below the 50, right? TrendCloud is to the downside. Great, right? TrendCloud's to the downside. We were cycling down here, getting a little bit of a hookup, but that's okay. This is the correction into the TrendCloud so that it can do what? Right? Here's impulse down. That's this line here. Correction into the TrendCloud. That's this little hookup here. Impulse down. That's what we are expecting. Okay. And momentum's on our side, right? We are below negative 100. So when you're below negative 100, that means you're allowed to take your supply zones, right? It's a simple concept. Look for the TrendCloud to be down across multiple time frames, right? Middle time frame, high time frame, even the low time frame, right? So here we've got TrendCloud. All three time frames are down, and we've got the momentum filter on the highest time frame down, and the CCI momentum filter below negative 100, right? Down, down, down on momentum, down, down on trend. Great. Look for those supply zones and take them. Is it going to work? I don't know. But we know from our back testing that it works. That's the TrendCloud system. All right. And it's color coordinated for you so that you can see that. Look at how it's just lingering near that entry, right? That 5-minute entry point. It's just lingering towards that 5-minute entry point. All right. Check your ADR checkpoints, and they are nowhere to be found, right? Plenty of room to the upside, plenty of room to the downside, right? We're more focused about this here, right? So we're going to take off half our position right here, okay? We're going to take off half our position right here, and we're going to take the rest off right there, because that's the end of the move, right? That's the end of the day. Take off two, take off two. There's your 4 contracts. Great. If you want to take off 3 and then let the other one run, great. You can do that as well. Those are all the combinations. Take off 2 contracts, take off 1 contract, and then just manage the rest by sliding your stop loss all the way down. Okay. Gold is edging down too. Okay. Let's check it out. So we're set up here. We are all set up. Gold, right? Gold has already opened. And What's the story on gold? Down, down, and down. Momentum is to the upside on the high time frame, but there we go. Okay, so we got in. We are in the trade. Cycling down, momentum is up though, right? Okay, so one little piece of the puzzle missing. We're just starting to hook down here where we've come into resistance here. We've got some TrendCloud signals forming, right? We are down, TrendCloud is down on the high time frame, middle time frame, low time frame. Where is the opening range? Okay. Broke to the upside on the opening range, right into, wow, look at that, right into that drop base drop there. Okay, so if you were looking at this, can we take another shot if it pulls back up in here on gold? Let's take a look. Yeah, we sure can. Man, that is quite a all right, we're going to take another shot at gold and see if we could get in on that. It's very possible, right? It's very possible for the move down. Okay. So we could take this drop base drop here. All right. We can take this drop base drop because downtrend, momentum's down on that middle time frame. This is really, the CCI indicator is really the indicator that tells you, yes, you can take this supply zone. All right. Now it pulled into there. Nice rejection candle here. It's very possible that we could continue to get in on that. Otherwise, we missed it, right? If we form a TrendCloud signal on a short candle, we can do that. Let's, we haven't, this is kind of a low time frame to use it on, but let's put our confirmation entry candles on here real quick and just see. Turn off TrendCloud. No. Don't see any confirmation entry candles. Interesting. See how we got it here? We got it right here. Right there. And we're looking for shorts. Okay. Well, we'll see. We'll see what we can get into here. Getting another move up. Maybe we'll get into that trade as well. Let's take a look. Pulling back. Okay, so we're still inside of that 5-minute supply zone. Pulling back. Maybe it wants the 15-minute supply zone. Either one will work. We are covered on both. We are covered on both. And now we can set up right here. 2 contracts, right? So we're going to take off half our position right here. And then the next target's all the way down here. Can take off 1. All right. And then let the other one run as far as it's going to go by sliding our stop loss. Okay, so we're all set. We're all set. We don't have to do anything else for this trade now. Isn't that nice? We saw the setup, we placed the trade, and now we can just leave it alone and let it do what it's going to do. All right, we'll check in on that. Let's try to get through this here. What is our risk again here? 180. Okay, so let's reduce our risk here on let's just risk $100 here on gold just to reduce our risk, because we've got $180 risk on the S&P here. Okay, pulls back into TrendCloud, starting to form a rejection candle there. What's it look like on the 5-minute? Recalculated. Okay, so now we are recalculated on the 5-minute chart. All right, we kind of want to see a little sideways action here now. We want to see some kind of sideways consolidation and then the drop down. There we go. Okay. $15-minute chart. Wow, look how it just came underneath. That's the actual area in question now. Man, gave us 1, 2, 3 shots. 3 shots at that drop-based drop. And if you're not in front of it, or if you didn't set some type of alert, you've got to okay. That's why pre-market setups are so important for discretionary trading. And that's also why looking at just specializing in just one contract where you can focus on that, that's also very effective. It's very effective to just focus on one contract as well. But in the live room, we really want to see as many different examples as possible, because you guys are practicing. And when you're practicing and you want to put in that screen time, you really need to see as many examples as possible. And that's the purpose of all of this, right? So right away, you're looking at gold and you're saying, wow, downtrend, downtrend, downtrend. Okay, momentum filter, that's still up, but that could change. Cycling, just starting to cycle down. We're at the top of a cycle on the middle time frame, and it has pulled into TrendCloud, and we're waiting for that move down. Here is the area where we could get into. All right, and if it does pop back up into there, we definitely want to get in on that. Right. Taking the full length of this drop, base, drop. Okay. Being that we went almost all the way through, let's put it at the very top of the leg in. Sometimes on the drop, base, drop, guys, I like to put my stop loss above the leg in of the drop, base, drop, not so much, right there. It just gives you a little bit more freedom, especially in this type of situation. and it's something to definitely notice. All right, so maybe we'll get in on it. Maybe we'll get in on this. Maybe we'll miss it. But if we form a TrendCloud signal, okay, so right now we're going up on the 5-minute chart pretty early, right? Because it pulled back and recalculated. So do you see how the possibility of this making a climb up to one of these resistance levels is possible? Right? Because we have an idea that this is early in the trend. It's a 5-minute chart. Everything is telling us downtrend on the higher time frames, right? High time frame downtrend, middle time frame downtrend, and momentum is down. Okay, so we're early in the 5-minute trend, and this means, right? Here's 1, 2, 3, 4, 5. That's a possibility. Where does that leave us? Leaves us up here somewhere. Leaves us up here somewhere in this middle time frame curve. And look at where it ends. This is telling us we could climb all the way back to here, to the top of this cycle here on the 4-hour chart. That's your high time frame curve, right? There's your high time frame curve right there. Everybody seeing that? Everybody seeing that? Right? Downtrend, downtrend. Momentum down on the middle time frame. But that little 5-minute chart, is early in an uptrend. And there's 5 waves in an average trend. So we could climb 5 waves. And if we do that, well, we're back up here into the high time frame curve where we can start looking for shorts now. Hopefully it pulls into this very first supply zone area, which is on the 15-minute chart right there. That's a 15-minute supply zone. The 15-minute trend is down. So in that scenario, we're looking good. In that scenario, we're looking good. So one of the most confusing things when I first started was understanding that concept. Wait a second, there's the 5-minute chart is up, but all the other charts are down. Well, what the heck does that mean? It means you've got to understand how far that 5-minute trend is going to travel. You know, how far does the 5-minute trend travel before we hit a higher level supply zone? Well, it could be stopped right here, right? See some consolidation going on here. Or it could break through that and make a 5-wave run all the way up to here. Okay, but so, when I was going through, and it's starting to, look how it just missed our entry. Starting to take off without us. So, when I was going through, many different schools, but online trading academy, studying with a mentor, until I learned that concept of counting waves, right? Until I learned that concept, I just couldn't grasp how far a trend was going to run, which is why I developed the TrendCloud this way, so that I could see, oh, blue candles. This thing has gone 5 or 6 waves. Now I know we're extended. Let me start putting the scenario together. What does it look like on the high time frame? What does it look like on the middle time frame? Where is momentum? Okay, so all those pieces really helped me understand what to do, and that's what made me consistently profitable. Okay. Hold on one second, guys. I'm going to grab something to drink. Hold on. All right. Sorry about that. Throat was getting dry. Okay. So wow, we just like, okay, where is the second chance of getting into gold? What's the second chance of getting into gold? Come on, opening range. Come on, trading view. Got a little bit of lag. There we go. Well, right here, we've got a TrendCloud signal, right? TrendCloud signal right here. That's going to, if our stop loss is here, that is going to affect the risk, right? That's going to affect our risk. Entry point on your TrendCloud signals are below the candle. So we have 11 minutes left in this candle. In which case the stop loss would go right above the arrow right there. And we could take that. We could wait for the breakout to the downside on the opening range, and then take the retest. Maybe this breaks out to the downside and then pulls back into this area. There's a million different scenarios, right? So we can only evaluate the trade as we move forward and say, you know what, this is still the best area, no matter what happens. This is a level of imbalance. We've got a resistance level in there. We've got resistance points all throughout multiple time frames, and momentum is down, right? If you miss the trade, that's fine. It's okay. It's okay to miss the trade. I like this area the best. I think we've got lots of components and we got 1, 2, 3. We had 3 shots at it, but we were examining something else. Here we go. All right. So we're starting to, so what did we do? Look what happened here. We went through the 5-minute zone and it wanted the 15-minute zone. No problem. We were covered. We were covered. Okay. So now we can actually take, if you wanted to reduce your risk and pull that down to here, once we hit like, once we get back down to here, you can start reducing your risk. But I think this is going to work out very nicely. Okay. So there you go. So 5-minute supply zone was not what it wanted. It wanted the 15-minute. And I've seen that happen over and over again. The higher time frames are always more significant when it comes to zones, which are levels of imbalance. They're more significant when it comes to support and resistance, which is mass psychology, right? The higher time frame will always take precedence, all right? This is quite a whipping. This is crazy. This candle is crazy here. A lot of indecision, right? Whenever you see a candle like that, that means indecision. And That's because of the Fed, right? So that Fed meeting, let's see, we have any more news? Benchmark Treasury on a win streak of the Fed. I don't know how that's going to affect anything. They give us a little chart here and expect you to understand what that means. US equity index futures red, NASDAQ. Dollar up, gold, crude oil edge lower. Bitcoin slides. Very exciting news. Unless you are 100% just in the stock market, fundamentals for technical analysis in the futures market, really no bearing, right? I mean, it's a catalyst, right? It gives you a little bit of a heads up. So what did we do? What did we notice today? We got in front of the charts and we said, we saw some news and we said, oh, the futures dip, right? So the news that the masses are reading, right? Futures dip. Focus turns to Fed meeting. That sounds like things are going down, right? Great. Let's see if we can fit that news that all these people are going to read into our analysis in technical analysis, right? And we go to our TrendCloud and we see, oh, wow, look at that. Okay, high time frame, trend is down and momentum is down. Well, that's powerful. Cycling down, right? So we're in an impulse phase right now. Okay. All right, let's go to the middle chart. Middle chart. Oh, look at that. TrendCloud is also down. Momentum is below negative 100. Okay. And we're pulling back into the TrendCloud on the 1 hour. All fits the narrative. Finally, you drop down to that lowest time frame that you're using. And you see two demand zones, one on the 5-minute chart and one on the 15-minute chart. Okay. Can we take the trade? Oops. Can we take that trade? Yeah. It's a $180 risk. Very nice. Very good. That's what we want. And which one's it going to be? We don't know, right? We didn't know if it was going to be the 5-minute supply zone or the 15-minute supply zone. Can you afford both? Great. Do it. Everything was in alignment for us to take the trade. There you go. Now you got some movement out of there pre-market, right? Well, now it's so we're going to be forming the opening range, right? We're going to be forming the opening range here. So there's your news, right? There's your news event. Everybody's reading that and they're saying, uh-oh, there's a storm coming, right? Look at all of this clustered together. That's beautiful. When we see that inside of a demand zone, you really have to say, look how it's, bouncing off of whatever that is. Go out to your higher time frame and it'll show you what that is. Previous week's open, right? Bouncing off the previous week's open. Heading back down to all of this. We've got all of this down here. right? On the 1 hour chart, much lower, right? We've got much lower. So I think we have a good chance of hitting this ADR checkpoint today. I think we've got a really good chance at that. And I really like, um, I really like how we're scaling out of this position here because it makes sense. It makes sense, right? Here's the start of the imbalance on the 1 hour chart. We've got structure here. Okay, see how the wick of this candle on the 1 hour chart is also the body of the candle on the 15-minute chart? That's a great target. Okay, and then you got all of this. So we're expecting price to really eventually break through this, maybe around 1 o'clock, it breaks through all of this. And sometime, during the late afternoon, we hit that ADR checkpoint. But I think when more people get in front of the chart and they start seeing this negative news and this big drop, I'm sure we're going to see more news come out any second now. Here you go. Now, how did I predict this? S&P falls 12. Yeah, we know. We know. We saw it. Okay. We called all the shots. And oh, look at this. The news has just come out 10 minutes ago. 10 minutes ago. We knew all of this the second we got in front of the screen. We knew all of this. We did it. Okay. You guys have the formula. You guys have the formula. You've got the masterclass. You've got TrendCloud. You've got the formula for calling the shots. You've got the formula for calling the shots. And all we're doing is setting up the trade and saying, let's see what happens. That's it. That's what you do. There is no scrambling for moving stops around and moving things. It's done. It is what it is. That's the plan. Let's see how close to the plan this thing is going to be. Maybe this wants to pull back, go sideways in here, and then drop. We don't know. But with all this negative news, the more people that are starting to read this 5 minutes ago, Wall Street cautions ahead of Fed. Oh, they're cautioning ahead. They must have a crystal ball. They're cautioning ahead. S&P lost 2%. NASDAQ was down. Dow Jones traded around flatline Tuesday. Tech and communication services were the worst performers. This is a lot of negative news, guys. Kind of almost makes me want to throw 5 more contracts on there, right? So all that negative news, I know, what's this? Why are we, why is this candle going up? You don't know. But we predicted all of that, okay? So now we've got the opening range, but we're already in this trade right up here, okay? If this breaks out to the upside, that would be a bull trap, right? Because momentum is tremendously down, right? I mean, it's tremendously down. I kind of like that. Momentum is tremendously down. Trend is down across multiple time frames. Momentum is down across multiple time frames, right? If this decides to break to the upside, that's why it would be called a bull trap. You're trapping the bulls. I mean, with all this negative news and with trend and momentum to the downside, why would this thing go up? I don't know. I don't know. But this is such a great example. This is such a great example to learn from because this is the essence of your trade plan. Now throw in negative news in your direction. Holy cow. So I think if this does break to the downside, um, a lot of people will be going short on this. A lot of people, a lot of breakout traders, right? A lot of breakout traders are just waiting for one little click below uh, the opening range, right? The second this thing just goes boop right below the opening range, they're going to jump in that trade. They're going to jump in that trade, and that's going to also be a force down. Then you've got people who want to be a little more conservative, and they say, okay, as soon as we break out to the downside, I'm going to take the retest somewhere in the opening range, right? Maybe, they see this here and they're like, okay, now I'm going to take this, but I'm going to wait for the breakout first, right? So then they're going to wait for this type of pattern. Breaks to the downside, pulls back into that 15-minute supply zone, right? Let's get rid of the 5. There you go. You guys seeing that? So that's the pattern that some people are looking at. But because we have TrendCloud, we see this stuff ahead of time. We see this stuff ahead of time, and we're saying, oh, okay, TrendCloud down across all 3 time frames. Momentum down across all 3 time frames. Let's do this right now. Let's get into this supply zone right now. And that's what it did. Pulled in. Look at how this candle right here, the candle that got us into the trade, this right here, look at how the second candle broke through that candle. That's a very powerful candlestick pattern. Okay. It doesn't totally engulf the entire range, but it definitely breaks through it. All right. So everything here is telling us the trade's going to the downside, but we're already in it because we saw all of that before the news came out, before the meeting. I mean, everybody's very, I guess, very bearish, on this Fed meeting. I don't even know when it is. When's the Fed meeting? Was it like 10:30 or something? I don't know. I have no idea. I'm reading the charts, right? You guys are chart readers. You're technical analysts. You're reading the charts, and you've got all the news right here on TradingView. That's what's so great about TradingView. Wall Street cautions. Oh, that sounds negative. S&P falls. That's bearish, NASDAQ, S&P slide at the open as focus shifts. Oh, what's this? Another. No, that's the same one. Okay. That's the same news flash. All right. So the moral of the story here is, oh my goodness. The moral of the story here is, take notice of the news and what's going on. If you see negative news, does that negative news fit the narrative of my chart? Does it fit the story that the charts are telling me? Does the news fit the story of the charts that are telling me? And when we saw that it did, we jumped all over it, right? So we just got to give it time. We just set the trade up and we're like, let's see what happens, right? Let's see what happens. 951. We haven't broken out anywhere yet. No problem. Scaling out of the position. Obviously, right here, there's just a ton of support levels. This could cause a little bit of a bounce, right? This could all cause a little bit of a bounce. Look at how we're pulling back into we're pulling back into this area here. If you didn't have a solid trade plan, if you didn't have an understanding of price action, you'd be scared to death right now. You'd be like, oh no, it's pulling back. It's pulling back into momentum. It's pulling back into all this downward momentum and downward trend. But because your trade plan, if it's not written out, if you don't have a solid plan of action or strategy, you will be susceptible to giving in to all the different variables that could take place, right? All the different variables that could take place, you're going to try to cover. You're going to try to cover every single variable, and that's impossible, right? I think more people, before someone becomes consistently profitable, I think they end up giving up because they don't have a trade plan, and they try to give in. When's the last time? I mean, I've been through that. Like, I've said, oh God, this is just, I can't, I don't understand. I just can't get it. And I think that's because you try to cover every single variable. Think about the last time you said, oh man, I don't know. I'm not getting this. I don't understand. Think about the last time. What was that? What was it that made you say, I'm not getting it? It wasn't just the fact that you were, hitting a lot of losing trades. It was more than that. It was more than that. It was, am I giving in to every single variable that comes my way? Am I giving in to every single variable? Am I, oh, it's starting to reverse. Well, let me do this, being that it's starting to reverse, and you start moving that stop loss and you put it like all the way up here. You're trying to cover for all the variables. I think that's the root of all failure in trading. The root of all failure, at least one of the top 5, right? Not having a trade plan, not practicing enough, trying to give in to all of the variables, right? Trying to give in to all of the variables, moving your stop loss, right? And over leveraging yourself, right? Was that 5? Those are like the top 5 that come to my mind. So yeah, like, oh man, yeah, throw it all in there, 20 contracts, go for it. We've got everything on our side, throw it all in there. Risk half your account. It's going to work. Big mistake, right? Big mistake. Oh, this news came out 11 minutes ago, but it's just popping up now. Well, I don't like that. I want news. Okay. Where is it? Newswire. We'll have to check out Newswire. Graham, you're really into news. What kind of what news do you subscribe to or look at for your information? Type it into the chat for everybody. I'm just using whatever comes up on TradingView. The S&P slips ahead of the Fed rate decision. Okay. So did the Fed meeting take place already? I don't know. Pulling back into the supply zone. No problem. It slips. It's going down. Wall Street caution, right? Just TradingView. Yeah. Yeah, just TradingView. I think that's all you need. That's all you need. Wow, look at this crazy looking candle that bounced off the 100 here. All right. So we're still in this trade. So yeah, so you cannot plan for every single variable that takes place. Simple as that. This thing's going to bounce around and do a whole bunch of stuff, and we're just going to manage it. What's gold doing? We were right about gold, and we missed, right? We missed our entry. It hit that entry, right? We would be in this gold trade. We hit that entry, but we didn't get to it in time. Okay. Breaking out to the downside here. Momentum is on our side. Trend is on our side. This is still the best area, right? This is still the best area for a retest. Still the best area for a retest, because now this is the this is the top of the cycle here on this downward movement. Pulls back somewhere inside of TrendCloud, inside of the opening range. Okay, there's your confirmation entry signal candle on the 15-minute chart. And it's also a TrendCloud signal, right? Drop down to the 5. There's your crossover, right? So look at this. So on the 5-minute chart, we could pull back into the 5-minute trend cloud for a move down. That's a possibility. That's a possibility. Unless we get a whipsaw back up to that higher time frame supply zone area. You'll never know. You will never know. All we could do is try. So I'm going to leave it right there on that 15-minute supply zone, because we've seen that happen. We've seen gold kind of make these large undulating patterns until it chooses a direction. Right here, high time frame curve. Makes sense. Oh, look at, really? Oh, Trading View Live on YouTube, Canadian company. Very nice. Oh, okay. Insightful. They teach around midday. Oh, very cool. Oh, very, very, very nice. Okay, so there's a YouTube channel. Yeah, let us know what the name of that YouTube channel is. Trader TV. Oh, I'm sorry. Okay, it's called Trader TV Live on YouTube. Canadian company. Very cool. Line up all the information. Line up all the information. Excellent. Thanks, Graham. Appreciate that, buddy. Okay. So you see, we only looked at 2 contracts in the hour, but it was, it was necessary. Look at 2 really good examples of a setup. And sometimes that's better than kind of doing a shotgun blast on every single contract that's out there. We saw some news and we said, aha, let's see if we could get in on that and use that news as a catalyst in our strategy, because we saw right away that trend and momentum was down across multiple time frames. We saw bearish news, and we said, you know what? That right there, we could use that to our advantage. We could use that to our advantage. let's see if we can capitalize on this. And that's what we did. All right. So very good job today, guys. I will monitor this and we will post it. We're pulling back, right? We're just going sideways. We're just going sideways inside of the opening range until this picks a direction. Trend and momentum is down. The only scenario that we could take is down on this. All right. So I'll monitor this and I will post it in the private Facebook group. If you have any questions, guys, if you're getting through the masterclass right now and you have questions about something specific, just let me know, shoot me an email, and I will make a video on it and send it right to you. And I'll also post it in the Facebook group. Okay, everybody, good job. And I will see you guys tomorrow. Bye, everyone.